Hi, I'm Milton Rendell and welcome to Real News Friday. Another big week, 911 sales. Slightly down though, it's about 3.6% on the previous week, but still a very healthy amount of numbers of properties being sold. Now in terms of stock levels out there, 8,294, so we seem to be creeping up a little bit. We had talked about some adjustments in the market, and we also talked about the timing, and we may still see this continue for a few weeks yet. The amount of stock is up about 2.4%, up about 6.8% on what it was about a month ago. But compared to this same time last year, we're still down about 8%. So it's still fairly healthy. In terms of rentals, 704 properties let in the last week. That was up about 1.5%. Number of rentals available, 2,453. That's up about 1.2%. Still very healthy. That is up 3.9% on 4 weeks ago, but down 14.5% on a year ago. So the pressure still is there to rentals. We are seeing people putting in applications and offering above rent still in certain areas, not in all, but in certain areas. And that trend we think probably will continue for the short term. Now, there's been a lot of discussion about what's been proposed out there by various people in terms of shared equity loans. It's an interesting one because when it was first mentioned a few weeks ago, it sounded like it was something new. It's certainly nothing that I would consider new. I've been in real estate since 1987, and shared equity loans have existed as long as that. When I first started real estate in 1987, there's a lot of local state initiatives that had shared equity loans. Now, what is a shared equity loan? Basically, at the end of the day, it's to help people get into the marketplace, but one of the challenges is that they don't have total ownership. So the government will own X, and so say, for example, 40%, and you'll own 60%. And as the equity grows in that particular property, the government will get its 40% of the total equity, and you'll get 60%. So if you were to sell in the future, if your property was $500,000, which is just for the simplicity of an example, which means your equity in it's 300,000. And if it was sold for $1 million, you'd get 600,000, but the government would get its 400,000. So you don't get the total growth of the property; you only get your share of the growth. So that's one of the challenges of it. There's also a number of conditions to those contracts. They are based at certain income levels. Once again, if you become above a certain income level, you'll be reassessed because obviously through the tax department, etc., they'll be able to find that out. So let's imagine that your income goes up above the threshold. You may have to go back and reorganise, but that also means that you're going to have to look at a total refinance of the whole situation. So it means you may have to buy out that other 40%. So that's one of the other challenges. In those contracts as well, the government has its opportunity to exercise a right to buy you out as well. And if you are to buy, if you are to sell, the departments that are associated with the other part of the equity have to sign up and agree to that contract. So you have to have a say by the other person who has the equity in that property as to whether you can accept a contract or not. So it's not as cut and dry as people think. It's not a bad thing, but these are the conditions that, like I say, the last 35 years, been in different shapes and forms. There are a number of various schemes out there to assist first home buyers, low equity, etc., from Key Start loans, etc., and these are not new schemes. They have been around for a long time. So if those who say it is new, it isn't. It is something that many of the states already have in place in various shapes and forms. So just if you're sort of thinking about thinking is that what the benefits of it are, you also have to look at what the downside of it is, and that is that you only own part of the building or part of the property, not the whole property, and that's probably one of the shortfalls, if any. Anyway, that's just to give you an insight on shared equity loans. A lot of people may not know that. All the best, and look, if you've got any other real estate questions, please check out realestateplus.com.au and call our offices for an appraisal or thinking about leasing, renting, whatever. Always happy to help you. Keep in mind we've got Plus loans and Plus your settlements as well. All the best. Look forward to speaking to you again next week.